So again, we begin by looking at the liquidations. Just to remind ourselves that Bitcoin is dangerous, or leverage trading in general. So we have nearly 300 million lost in liquidations, nearly 50,000 people. This is the same day as when I made the Pi cycle video, so the numbers are about the same. Last time we looked at the Pi cycle indicator and it would flag near the peak, and we had a look. This is another method which we're hoping to use to try and find the top. This is different in that it's not using a moving average. It's not looking at the price of Bitcoin. Instead, as it says here, this metric looks at the supply side of Bitcoin's economy. So this is looking more at the miners as opposed to the Bitcoin price. And like with the stock flow model and the 2-year moving average one, you know, where you had the 2-year moving average and 5 times the 2-year moving average, we have bands. So when the price is low in the green zone, we should be buying. Or historically, that would be a good time to buy. And when it's in the reddish zone, we should be thinking of selling. That doesn't seem as clean as the Pi cycle. You know, with the Pi cycle, when the 111-day moving average went above the 350-day one, you know, that's when it was a clean sell. While here, it looks more like, as I said, the stock to flow and 2-year moving average one. It doesn't say buy. Or sell. So we want to be buying if it's down here, selling if it's up here. What it can do is say, for example, now, we recently had a dip. And as the price was going down, this didn't look like a sell. So looking at the Puell multiple, people were kind of going, stay calm. Okay, it dipped down here, perhaps, but it wasn't your typical sell signal. In fact, remember I mentioned in the Pi cycle one that the Pi cycle was backfitted to historical data. And so, in fact, even the inventor of the Pi cycle was saying he didn't think that it was a signal to sell in the recent move up. So recently we had the price up to, I think 64 or something, or, you know, we had a recent, a local maximum, and the Pi cycle said sell. Though the inventor of the Pi cycle said, look, this has been set to historical data. I don't know whether, I wouldn't say that this is a fundamental signal, you know, that it captures an underlying reality. And the people who, like myself, didn't sell at the top would also be looking at the Puell multiple and going, okay, so the Pi cycle is saying sell, but the Puell multiple is still calm. So far, you want to sell when the Puell multiple is in the red zone. This looks fine. And there are multiple metrics, and they were all saying this is fine. So whether that means that actually the Pi cycle does capture something, time will tell. But the Puell multiple was one of the metrics that people were talking about when they were kind of saying, I don't know, I'd ignore the pi cycle. So I suppose recently you would have made more money if you'd sold using the pi cycle and not paid attention to the Puell multiple. Now you might be going, why is he talking about the Puell multiple when surely this suggests that it's not that great? Well, this is looking at it from the point of view of the miners, from the supply side of Bitcoin. So I would say it's quite localized. So perhaps the sell signal is when the Puell multiple reaches the max and starts going down. So here it went up and then started going down. So it went into the red zone and left it. And then you would have sold, here, close to the top. You're not going to get it exactly at the top price, but that's, the Puell multiple shot to the top, it fell down, but here we didn't see much of a difference. So, we could have sold then. Likewise here, it very rapidly went up and down again. So we would have sold at quite a reasonable price. Same here. So one way for me, looking at this now, would be to wait till the Puell multiple reaches a top, and then we see a sharp decline, and then we go, okay, sell. Now it's not going to be exactly at that precise point, but it's very close. Likewise here, we had a sharp spike up and then a sharp spike down. But if we'd sold here, we had a sharp spike and it started going down, we would have been very near the top. And actually here it was at this high price level for quite a while. So even if we'd waited till it left the red zone, we wouldn't have done that badly. Okay, so in fact here the price was up to 27 and it fell to 14, or but I don't think that missing the top by 30-40%, even 50%, is the end of the world. It's not actually that bad. Remember, the price shot up from under $1 to 17. If you got out at 15, that was pretty close. So that's not bad. I would say I prefer the pi cycle. Because you have a clean signal. I mean, the second one number is higher than the other, I should sell. While here I'm kind of interpreting what's happening. I'm seeing this nearly like the stock to flow, that we're in a region when we should be thinking about selling, or we're in a region when we should be thinking about buying. It's not, to me, as precise as the pi cycle was. In fact, it even mentions how it can be used. I'll have a link to this page in the description below the video, so you can have a look at it yourself. Next, we're going to start looking at a couple of on-chain analytics. So in Bitcoin, every transaction is recorded on the ledger, on the chain, or on the blockchain. So everything from way back here to now is on the permanent record. And what you can do is analyze that data set. And that is on-chain analytics. And a range of methods have been developed, again, for answering the basic questions that everyone wants to know. When is a good time to sell? So we're going to look at one of those next. If you know any method yourself that you'd like to know more about, since maybe I haven't heard about it, but if people mention things, it should be available on the web, so I can look it up, see whether I can find out about it. Maybe that is something I should know about. That's the power of YouTube. That if we all work together, we can find the solution better than any of us could do alone. For example, if I create content like this, so when I look at this, I have to go through it in far more detail than I would if I was just looking at it myself. Since, I could just go, okay, there's a red zone, there's a green zone, blah, 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 blah. But if I'm actually recording a video, I have to kind of explain things in more detail than perhaps I would if I was just looking at it myself. So it improves my knowledge a lot as well. That's the payoff that I get. And in fact, it's due to other people producing content on YouTube and maybe podcasts that I was able to learn about it. Next time, we'll be looking at an on-chain analytics method, which I'll be using when we're approaching the top in this bull cycle. See you then.